Welcome back to Professional Insights, brought to you by the National Referral Network. This morning, we've got a great topic this morning because homeowners across the country are facing a growing crisis, and then that is really skyrocketing insurance rates, shrinking coverage options, and actually companies pulling out of areas, leaving homeowners with a lot of questions. So today, I'm joined by Mark Hatch, an extremely experienced insurance professional who specializes in helping homeowners and business owners protect their most valuable assets. And we're going to jump into a deep conversation, try to understand what's happening in the shifts in the landscape with homeowners insurance. We're going to shed some light on what he's seeing in the market and how you can protect your home moving forward if you're in some of these areas, which we're going to get into. But before we do, hit that like and subscribe button. Leave any questions you have. Part of this content that we create is driven by your questions. So leave them in the questions below. His link will be in the description below. You can get hold of Mark if you have any questions. But with all that out of the way, let's dig into this. Mark, what's happening?
Hey, Mike. Good to see you again.
Good to see you, buddy. We're so close, and yet we don't see each other very often anymore.
Isn't that the truth?
It's crazy. Time's been going by so fast. So
a couple of busy guys, that's what happens.
Tell you what, and I know the joke with our group that we used to be with is that I rarely leave the house, and I think it's getting worse. So, look, we're seeing a lot of significant changes in homeowners insurance right now. Can you explain why these companies are making these decisions, leaving the areas? And I know that's a pretty big question, but why are they doing what they're doing right now in terms of increasing rates and leaving areas?
Yeah, that's a big question, Mike. But I think the right approach, the starting point would be people need to understand that insurance is nothing more than the law of large numbers. That's what drives insurance. And so insurance companies over the last 5 years or 10 years have seen a huge increase in catastrophic losses. We've had, Hurricane Ike down in Florida, I want to say 2 or 3 years ago, if I recall correctly. I mean, they are still paying off those losses that they paid for that. And now we just got hit again with Hurricane Helene. The last I've read is that is probably going to cost around $110 billion. And, insurance companies are absorbing these losses. And not to mention the wildfires that we see here in the western part of the United States, or the flooding in California, the wildfires in California. I mean, there are the tornadoes in Oklahoma. There have just been so many of these, and they're on the rise. They're increasing, and so insurance companies are paying those losses, and they are not bringing in enough premium to pay all of those losses. And then to compound the problem is that to build back a house, as well as I do, that the cost of lumber has gone up, the cost of steel has gone up. We're in an inflationary economy. Well, insurance companies are in the same economy, so what they buy to build back a house is costing them more. And so in a way, they're kind of getting the perfect storm. Their claims are up, their catastrophic losses are up, their cost to replace is up, and they have to increase premiums. And so, I should have said before we started, I'm not here to defend the insurance companies at all.
I was going to say something, because a lot of people watching this, Mark, really don't give to, how much money the insurance company makes. So,
right.
I mean, we're on the same page here.
That's exactly right. I'm an independent broker. I work with a lot of different companies. We advise our clients on what the industry is doing. And what we're seeing is that insurance companies they're having to increase their premiums to compensate for all of these losses that they've had. And they're just trying to catch up. Any of you who have invested in an insurance company, you've seen you don't have huge returns in your stock that you purchase in their company, because the returns just are not that great. They collect a lot of premium, but they're paying out a lot of claims. And so that is one piece of it. Two pieces that are happening: large catastrophic losses that are more than expected. Secondly, we've got inflation. And then the third is that there have been some government regulations that have been put in place in various states where they have said, okay, insurance companies, you're not allowed to increase your rates above X percent, or they've put limitations on them. And so, or they've said, you have to insure coverage in this area. You have to, let's use California as an example. You get a high wildfire area and they come in and they say, well, I'm sorry, you've got to insure these homes in this area. The insurance companies, they're running on a capitalistic economy, area market. They just say, well, then I'm not going to write any more insurance in your state. And so they back out of the state completely. And that just compounds the problem, because now you've got all of these risks that need to be insured and you have less insurance companies to do it. That drives up the price. And so you've got all of these different factors that are all going one direction right now. And that is increasing premiums. And
I heard that there was companies that actually insure insurance companies. Is that reinsurance? And I understand, and correct me if I'm wrong here, but I understand that globally they are getting squeezed with other things that are happening around the world, and they are not making as much money. So they're increasing their premiums upon the insurance companies, and then it's kind of a trickle down. Am I reading that correctly?
We might need to flip our roles, Mike, and I'll start asking you. I'll start interviewing you. You nailed it, bud.
Okay.
Because
awesome.
that is exactly right. Insurance companies buy insurance from reinsurance companies. Well, these losses of these large hurricanes and these huge catastrophic losses that are happening, they are exceeding the limit that of risk that insurance companies going to take. And so reinsurers are paying out on losses that they hadn't actuarially accounted for. So they are raising their premiums to the insurance companies, who are raising their premiums to us to pick up on these added losses that they're paying for.
And then in somebody's insurance policy, Mark, I know that there's always been add-ons to them. California, you can add on earthquake or flood insurance. Yeah. So the bolt-on, or this policy itself doesn't have these bolt-ons, which a lot of homeowners don't realize. Mm-hmm. Are insurance companies just moving out of areas completely, or are they saying, look, your base policy only covers X. If you want fire insurance, it's going to be this plus that?
Kind of. What that is let's use earthquake, which is a good example, because we have that issue here where we're located as well. That if somebody wants to buy a coverage on their home, earthquake is typically excluded. Now, if they want to endorse the policy to add earthquake, they can do that, but it's going to cost them, here where we live, it doubles. It's about essentially the same price that you pay for your home. And so the base policy normally excludes various things, like catastrophic things like earthquakes, landslide, floods. Flood is a huge issue because we're seeing so much of that now with Hurricane Helene, and so many people just don't buy flood insurance. They think they don't need it. And then now we have those kind of catastrophes, and we've got these poor people who have nothing left because they don't.
So they don't get anything from the insurance company because they don't have this particular line item in their insurance policy.
They didn't purchase the flood coverage.
Unreal.
Hopefully their agent offered it, but in flood, if you're in a high flood risk area, it's going to be expensive. If you're in a low flood risk area, flood's going to be inexpensive. And so a lot of these places that got hit, North Carolina in particular, it's not a huge flood zone, but it is a flood risk. And those people that purchased flood insurance have insurance companies coming in and helping and paying there. But a lot of people just didn't buy it. This is really a good example, Mike, of something that I see a lot in our industry, that people come in and they just say, I just want the cheapest policy on the market. I want to save money. I get upset that I have to pay all of this insurance premium and I never get anything back. So then what do they buy? They buy the cheapest policy on the street, and it has very little coverage in it because it's so cheap. And that's, if you want to have a robust policy, you should work really closely with your agent to make sure that what you want to cover is built into that policy.
So, Mark, let's dig into that a second.
Yeah.
Because if I have a home and I'm in one of these flood areas,
Yeah.
and I've been paying premiums, but it doesn't cover flood insurance. My house gets washed away. What exactly is the insurance company covering if I don't have that flood insurance?
It's covering everything else that could have happened to your home: fire, lightning, hail, wind, all of these other perils, insurance perils are covered. And then if you want to have flood coverage as well, you purchase that you have your policy endorsed to include flood coverage, and then you have that.
But I won't get paid out. I lose my home, and because I didn't have flood insurance, they're not going to reimburse me.
That's exactly right.
So then logically, Mark, and this is like a light bulb moment here. Let's just say a vast majority didn't have the flood insurance, which means the insurance companies, a vast majority, are not reimbursing for these homes that were lost in Hurricane Helene.
Yeah.
Then how is the insurance company losing money if they're not reimbursing these people because they didn't have this particular aspect of their insurance policy?
Because of the ones who did purchase it. And there were more who did have to, they had to pay back, and costs are up, inflation is up. The number of people that lost their homes, let's use Hurricane Helene, I'm sure that was outside of their actuarial tables. And
yeah, absolutely.
Those losses were far greater than what they projected for, even, specifically those who have purchased flood coverage. And so for those homes, they have collected an additional premium, but the number of losses was not compensated for with the premium that was collected.
So moving forward, Mark, how do homeowners look at this? I mean, let's take California as an example. You mentioned it. They've done a lot of things legislatively. Yeah. We won't get into that. But how do homeowners now living in California navigate this new environment where they may not be able to get insurance?
Well, look, there's a couple things. First, insurance, you need to remember, insurance is nothing more than a contract. Okay. Just like if you were going to sign a business contract with a vendor, you would know what's in there.
Correct.
And nobody reads their insurance policies. I know that. I've been doing this for 35 years. I know on one hand how many clients read their policy. So it is very, very important that they partner with a broker or an independent agent who they know, they trust, who is knowledgeable, who they can sit down with. I understand insurance is not fun. It's like, oh, great, let's go talk to our agent and have him interpret our insurance policy for us. That's not a fun,
super exciting.
That's not a good date night, let's say.
Great. Yeah. Perfect.
And so, but that does need to be done, because there are so many people who think, oh gosh, I'm insured for everything. And then those things that are not insured happen. And now they've suddenly got this unpaid claim. And then what do? They complain, and it hits the public, and everybody says, oh, these darn insurance companies, they just don't pay their claims. Well, if you look at it, the insurance companies they are obligated to do exactly what the contract says, just like any other contracts that we sign. And so when it comes time for a claim, that's why we have insurance commissioners in all 50 states, to make sure that claims are properly paid. And so you have regulations in place that require the insurance companies to pay what they are obligated to pay. Now, to your point about California, where there are some areas where insurance is just not being offered, some states, and I can't speak for California, I'm sure I could look this up and find out, but just off the top of my head, I shouldn't commit to this, but most every state has a guarantee fund that people can contact. And that would be to reach out to the insurance department of your state and say, hey, I live next to this river that floods every other year. How do I, and none of my agent cannot find any coverage for me. Who do I talk to? And they will either know an insurance company they can direct you to. Some states have flood programs in their state. There is also a national flood program that that's open to anybody.
I've heard about that.
And so, and it's called NFIP, the National Flood Insurance Program. And that is another plan that people can get coverage on. Now, they may not like their premiums. If they're living in a high risk area, they're going to pay a high premium for it, but they can at least get the coverage.
So with these clients, Mark, that, right, like you mentioned, and I agree, most people don't read their contracts. But what are some of the proactive steps that somebody can take right now? Like maybe they're working with Progressive or one of these online providers, right? They just call in.
Yep.
What are some of the proactive steps somebody can take right now to make sure that they're covered for these catastrophic areas?
I'm not a big fan of the instant quote, buy your coverage in 10 minutes idea, because the average person buying insurance doesn't really know what they're buying. They feel, oh, I have a car, so I have to buy auto insurance, so I want the cheapest thing, and that's what they buy. And so they don't really have an advisor that they can sit down with. Again, that circles back to finding an agent and buy it a different way. If they have it with a Geico, maybe, let's say, you can call Geico and get to the right people and say, hey, I want you to spend 30 minutes with me and tell me what I'm insured for. And they do have people who are employees of the insurance company who can walk them through that. It's a little bit of a painful exercise, but they can at least find out what they truly have and don't have. And I would highly recommend also that they have their policy in front of them so that these people can reference the page number they should be going to on their policy, because you don't want to just have a phone conversation with somebody in a call center who says, oh yeah, don't worry about it, you've got coverage.
Right.
And then you don't have the coverage. You got to see it in the contract. It's got to be written down. So I guess my biggest piece of advice is, understand what that policy says, what it is covering and what it is not covering. I can give you a little bit of a hint or a help that will be that should be helpful to some of our listeners, and that is, in your policy, you have. They get a little complicated because they'll give you something on one page and take it away on another one. But there is always a section in there called exclusions. Start there. Well, I guess not. Look at your coverage limits first. Those are usually the first 5 or 6 pages of the policy. But after that, find whatever page exclusions are on and look at those and read what is excluded. Because that will answer a lot of your questions about why a claim didn't get paid. Because it's in the contract and they're not obligated to pay for it.
So Mark, there's a lot of misconceptions in a lot of the insurance fields related to how clients work with professionals. So I want to be very clear. I want to ask this very directly.
Good.
Do you charge extra for clients to work with you?
No, I do not charge a fee for somebody to have me as their broker. Quite frankly, it kind of goes the other way, because I'll frequently take them to lunch, visit, or I'll buy them a gift basket once in a while. I don't know, whatever it is. So no,
I know you play a lot of golf, so I mean, there's that too.
I'm taking them golfing. There you go. So no, there is no added fee for them. And you'll hear the ads on TV. Oh, save 15% and don't go to your agent.
Right.
That's a bunch of nonsense. It gets built right back in because they've got to have agents internally that they're having to pay for. And so, no, there is no added fee for using an agent or a broker. I do want to add one thing to this is you have 2 different types of insurance companies. You have a captive insurance company and you have an independent insurance company. And same with agents. A captive is simply an agent who only sells for one company. Let's use State Farm. That's a perfect example. Okay. That is a captive insurance company who has captive insurance agents. When you go to a State Farm agent, they can offer a quote to you and they can say, would you like to buy State Farm or would you like to buy State Farm? Which one do you prefer? And if you go to an independent agent, they can take your information and take it out to all of their carriers. Like, for instance, I think of our agency, we've probably got 50 would be my guess. They can take your information out to all of the carriers that fit your dynamic of where you live and come back and maybe have 3 or 4 different quotes for you to talk about with your agent, and then you choose which insurance company you want to work with. Having been 35 years in the independent agency, I'm a little biased. I think that's a smarter approach to go. But I think there are a lot of people who would prefer to have options as opposed to just one quote.
When I don't think a lot of people understand that they do have those options, Mark, because to your
Right.
point, they don't read their contract and their lives are busy. And so
Yeah.
they don't take the time to really sit down and look at the first question is, do I have options?
Yeah.
Right. And then so it's this thing, and we talk about this all the time, is that I've known my insurance agent for 30 years. And to my point, I don't care if you've known them 50 years. If
Yeah.
they're not serving you,
Right.
then find somebody who will.
Right. Yeah. Find someone who you can talk with at a time other than when your policy renews and they're looking for a check payment.
Right.
Find somebody who you can pick up the phone and they will answer, and you can talk to the agent, not just maybe someone in the office or something else. Find someone who is a licensed agent who can really advise you on what your policy covers and what it does not cover, because it is as we've seen with these poor people on the East Coast. I feel so sorry for those that don't have any coverage, but they probably didn't have a conversation with their agent, or maybe they were advised differently, but they didn't purchase the policy that they needed for what happened. It's that easy.
And Mark, I'm not big into the marketing tactics of fear of loss.
Yeah.
But I do want to explore that, right?
Yeah.
People back east right now, they paid whatever they paid for a home, 400,000 or 500,000 a couple of years ago.
Yep.
It might have some equity in it, but the reality is the home is gone, and now they have nowhere to live.
Yeah.
Is that what's happening?
Some of them, some people, yes.
And so now they have no house. They're not getting reimbursed. They've got to find a place to live. Now they're completely displaced.
Yep.
And very few of them, because they had a house to live in, they don't necessarily have some reserve cash flow to go buy another home.
That's correct.
So, and like I said, I don't mean to be fear of loss, but at some point in time, financial literacy in this country is going down. And at some point in time, we've got to smack some people around.
That's exactly right. Because what's happening now is FEMA should be showing up, helping with things and offering loans, okay, to let them now rebuild or go buy another house or whatever they're going to do. But that doesn't always happen, and it's bureaucratic, and it takes a long time, and is a very difficult thing. And so, people need to not only educate themselves on financial matters like this, Mike, like you're saying, but maybe start saving a little bit of money, not spend everything that they earned in their paycheck. I know that's a big ask to do, because some people, that's hard to do, but that reserve for a rainy day, no pun intended here, that is really, really important. I know as we advise our clients, we don't just talk about insurance coverage and policies. We talk about, how do you manage your risk? I know what are some smart ways for you to manage the risks that you're living under. And we talk to homeowners whose kids are now suddenly driving a car. They're teenagers. It's like, okay, how do we manage this? Why are you carrying a $250 deductible? If you can manage a $5,000 deductible, do that. Take a little bit of risk on, because that will lower your premiums, especially in a hard market like the one we're in now. And it'll help you understand, okay, I've got some risks, but I'm going to absorb some of those risks. And so, there are some of those kinds of things that people can do that I recommend for sure.
Yeah. Well, so what final advice, I know we covered a lot, Mark, but what final advice would you offer homeowners who are navigating some of these challenges in some of these states in ways to best protect themselves?
I think the number one tool is what I've already mentioned too, is you've got to find yourself an insurance agent who you know and you can trust, who is going to advise you properly. you can't expect everyone to understand an insurance policy, and you need to lean on an expert. Just like, Mike, you're not gonna fill your own cavity. You're going to the dentist, right? Well, with insurance, don't just buy something because they have a cool ad, on a commercial. Go talk to someone who can really advise you what you're getting, because then if you intentionally know that you don't want to carry flooding insurance, that's fine. But just know that when the flood comes and it's not paid, it was a decision that you made, not something that you just didn't know about. So educate yourself and be smart about it and handle that problem.
And I appreciate that, Mark, because one of the things that I've talked more about this on these interviews is that don't be afraid to walk away from somebody if you don't have that gut feeling.
Oh, right? Yeah.
You can sit down with a professional. I don't care, dentist, doctor, insurance, financial advisor, pick a topic. It doesn't matter.
Yeah.
If you walk in and after that conversation, you walk out and you're like, don't use that person.
Yeah, that's right. You can, well, maybe it's because I've been in the business for so many years, but I can tell real quickly if an agent already knows what the commission is before he's talking to his client. If they've calculated how much they're going to make on the deal, where their head's at. And so, like you said, Mike, that's actually a good way. Trust your gut. You know if something doesn't feel right or not, and find somebody who you trust. Somebody.
Mark, and I'm going to one up this, and this might offend some people. It includes family.
Yes, for sure. You can hurt family relations if you go, I'm going to my brother-in-law. He's my insurance agent.
It doesn't make him a good insurance agent.
I tell you, turkey doesn't taste good at Thanksgiving if he has stiffed you on a policy. That's for sure. So, that's actually a really good point, Mike. That can hurt some family relationships.
Awesome. Well, Mark, I know there's a lot of things going on. We can continue the conversation, but I know it's late because we're recording this. So get home to your family. Thank you so much for being here, guys. If you have any questions, leave them in the comments. Hit that like and subscribe button. Mark's contact information, at least his website, will be below. If you have any questions, please let us know how we can help. And as always, Mark, appreciate you being here.
Hey, great to see you.
Okay. Thanks.